The rich don't play by the same tax rules as the rest of the world. But the twist is, they're not breaking laws. They're just playing the game with better information. We're exposing the real ways the rich legally avoid taxes and why the average person ends up funding it all. Taxes aren't equal. You pay taxes on your paycheck. They pay taxes on investments, and sometimes not at all, because they know how to shift their income, hide it in plain sight, and defer it for decades. We're going to break down 5 common strategies the wealthy use and how it all stays legal. Strategy number 1, borrowing against wealth. The rich don't sell assets. They borrow against them. If you own $10 million in stock, you can borrow $5 million against it. And because it's a loan, it's not taxable income. This lets them spend like they sold it without triggering capital gains taxes. It's how billionaires buy yachts and jets while still reporting 0 taxable income. Strategy number 2, real estate depreciation. Real estate is one of the biggest tax tools in the game. Why? Because the government lets you claim a loss for wear and tear even if the property goes up in value. It's called depreciation. A luxury rental that earns $10,000 a month might lose $40,000 a year in depreciation, reducing your tax bill on paper while cash flows in. Strategy number 3, tax-deferred investing. The rich use IRAs, 401ks, and trusts not just for retirement, but for tax deferral. By stacking contributions in tax-deferred vehicles, they legally delay paying taxes until decades later, often when they're in a lower bracket. And many pass assets to heirs inside of trusts that avoid probate and skip estate tax traps. Strategy number 4, pass-through entities and limited liability companies. Want to write off your car, your laptop, your meals, and your flights? Structure your life like a business. The rich use LCs, S-corps, and partnerships to shift personal spending into deductible business expenses. Suddenly that $6,000 vacation? Now it's a client development trip. Entire lives are funded through tax-optimized entity structures. Strategy number 5, phantom losses plus offsetting gains. Ever wonder how a millionaire pays $0 in taxes on a $500,000 profit? Simple, they offset it. The rich invest in things like oil, equipment leasing, and real estate syndications that create phantom losses. Losses that don't cost them money but wipe out gains on paper. It's not magic, it's math. Why it's legal, how you're paying for it. Congress writes the tax code. The wealthy fund elections. The incentives are aligned to protect capital, reward investment, and encourage job creation. So, if you're working hourly and paying 25% plus in tax, it's not a mistake. It's the design. You don't need to be rich to use what they use. You need the structure. You need the awareness. And you need to stop earning like a W-2 when there are 1099, K1, and LLC strategies sitting wide open. Download the Passive Income Starter Kit below. Subscribe to TheLuxLedger for weekly wealth system breakdowns. The tax game is rigged unless you start reading the rules.